Hello and good afternoon, everyone. My name is Jim McElhenney. I am with a group called FranNet, and I'm honored to be here today. Thank you to SCORE Pasco Hernando County for giving us this opportunity to talk a little bit about franchise business ownership. My hope today is that with the hour we have, that we will be covering the franchise model, talk about different ways that people can get into business as well, and maybe show you a little bit about some of the resources that are available if you're thinking about franchise ownership for yourself. Just a little bit of housekeeping here. If there are any questions, please throw them in the Q&A. We'll take them at the end for sure, okay? So thank you to those of you who joined. Let's jump on in. I'm sometimes a little technically challenged here, but no, okay, there we go. So just a little bit of background on me, if I could. Again, my name is Jim McElhenney. I'm a consultant with FranNet. We are one of the consulting or broker groups in the franchise space. I've been in the franchise space myself for about 10 years. In fact, the little secret that I like to share with people is that I was actually a client of FranNet roughly 10 years ago. I was making my own decisions of leaving corporate life, which I had been in for many, many years. And I was thinking about business ownership. I didn't necessarily have the bright idea of my own. And I frankly probably didn't have the risk profile to support the bright idea. So I started to look at franchise business ownership, and we'll talk a little bit about what attracted me to that as we look at the characteristics. But I became a multi-unit operator through the work that I did with FranNet. I invested in one of the national hair care chains. You might know the brand Supercuts. I owned a portfolio of Supercuts here in Florida. I don't own them anymore, but it was really my first foray into franchising. And for the last 4+ years, I've been on this side of the desk helping people the same way FranNet helped me back 10 years ago. I live in the Tampa Bay area. My former career was in banking and financial services. So hopefully that's a data point that shows you that you don't necessarily have to take your past experience and replicate it in a franchise. It's really about bringing your skills over. In my case, going from banking and financial services over into personal services and specifically hairstyling. So who is FranNet? We've been around for quite a while, actually. We're about 35+ year old firm. We were one of the first in the space of helping people study and examine franchise business ownership. Today, there are more than 85 of us spread across the United States and Canada. We work nationally, but we also play locally. So me being here in the Tampa Bay area, and I suspect through Pasco and Hernando County, many of you are as well. I know these communities, I know the areas, I know the brands and the demand and the needs. So hopefully when someone in this area is thinking about ownership, I can help support them in trying to create a match for them. We also have national partnerships. You know, we really partner with any organization, government or otherwise, that really is in the space of helping people to think about business ownership and to be a resource. So I thank SCORE for bringing us here today. We're one of their resources when they do want to showcase franchise business ownership. They'll call upon us, as they did today, to tell you a little bit more about the model. What do we do at FranNet? In simple terms, we match prospects with franchisors. The first thing that I'm doing with anybody I'm working with is primarily like what we're doing today. It's education, right? It's just helping people to understand the model, make sure that we debunk any of the myths that might be out there, but really help them to get to a point of deciding, is franchising even the right model for me? If they want to go beyond that, yes, we can support them in terms of getting to know them better and their vision for business ownership. That will help us to then think about how we might match them with possible franchises and then ultimately support them as they do their research. So part of what I like in our model and what my clients tell me is that we pre-screen brands. You'll see later on, there are thousands of brands in franchise. We work with roughly 200 or so brands across a whole range of industries. So I'd like to think that what we do is we set the bar pretty high. We're kind of picky, but the brands that we bring to our candidates as possible brands are brands that we have vetted on the way into our portfolio as well as on an ongoing basis. The other thing I like to share with people is I don't sell franchises, right? It is not my job to tell you everything and anything about the franchise. It's my job to understand your goals, to think about brands that might be a match to the vision you have for business ownership, and then to support you as you engage with those franchisors to do your research to get to a go or no-go decision for yourself. So let's get into it. Let's talk a little bit about business ownership. I see it simply as there's three main ways into business ownership, and you see them here in front of us, right? One is start a business from scratch. We know people who've done that. The other is you can buy an existing independent business, maybe a mom and pop that's in your community. And then thirdly is invest inside of a franchise. So let's break that down and let's look at some of the details here for this. So starting your own business, I tried to lay out pros and cons of these three models. And so I think hopefully the takeaway you've already gotten from me is I don't see any of these as a bad way into business. It's really about figuring out what's the best way for you and what are you most comfortable with. But let's talk about starting your own business, right? You have that idea, you want to dig in and start it. Well, you have total control and independence, right? It is a blank piece of paper that you are putting your business down on to design it the way that you want to run and operate it. What are some of the cons or detractions from that? Well, it's going to be time, right? So there's a lot of trial and error. Talk to anybody that has started something from scratch. They will tell you that they spent a lot of time making mistakes and changing things and upgrading again, right? So it's costly learning. It's costing you time, and it's usually costing you money as well. If you look at buying an independent business, right? Let's say it's someone in your community who's at the point where they're thinking about retiring. There's a lot of businesses out there these days that are actually coming into that phase because of the aging of baby boomers and people looking to exit their own businesses. But if you buy that independent business, there are some definite advantages, right? It's already established, it's up and running. There are customers, there are employees. If it's a business that has a physical space, it's been built out, and there's cash flow. Now, on the other side, I always say to people, do your research. Understand the motivation of why the owner is leaving or trying to leave at this time. What's their sale motivation? Also, think about the retention aspects of the business. That owner moves on. How loyal are those employees to him or her? How sticky are they for you? Because you will need them to carry forward that business. So think about retention of employees and maybe some strategies you have to think about to keep people in your business. The same goes with customers, right? Understanding how many of those customers might stay with your business because of a change of ownership. And then there's also your personal learning curve. I think about this sometimes as you're stepping onto a moving train, right? That business is up, it's running, it's cash flowing, but now you're the one who's trying to get up to speed so that you can catch up to where that business is currently running at. Third is buy a franchise. Some of the things I like about franchise is that usually there is brand recognition, right? There is an established system of operations, documented, that's going to be handed over to you so that you can replicate it in the community where you choose to open your business. Sometimes there are economies of scale, right? Franchisors, the ones offering the franchise to you, they might go out and negotiate special terms with suppliers and vendors and contractors. So you might get some pricing advantages in terms of how you invest in starting up your business compared to if you tried to do the same business on your own. The other one that doesn't get talked about often, but it was certainly one of my own experiences, is you have this franchise family, right? When I owned my Supercuts, the ability to pick up the phone, talk to other owners, business ownership, solo business ownership can be lonely sometimes. And don't underestimate the power of being able to call other franchisees and talk through maybe a challenge or a decision you're making in your business. I always found that to be an open line in the business that I operated for those years. There's initial and ongoing training, right? So, similar to me coming over from banking into owning hair salons, right? I counted on initial training from the franchisor, and I counted on ongoing training. That wasn't just for me, but that was also for my teams of hairstylists as well. That's how we kept current and relevant in our business. Usually because it's an experienced business model that's been out in other communities, tried and tested, it generally is a lower risk and a faster growth. In fact, one of the statistics that the Small Business Administration has shown is that the rate of failure on start your own business, back what we were looking at on the left side of the slide, Actually, after 5 years, about 1 in every 2 businesses has failed. In a franchise, after 5 years, more than 90% of franchises are still operating. So there is that lower risk profile because it's been documented and tried before. And then also there's the options around exit strategy. At the end of it, whether it's you're trying to sell the business, retire yourself, the franchisor might support you. The fact that it's a known brand in your business actually might help you to sell your business on to someone else who will take it over for you. But there are cons in this model as well. You don't have full independence the way you had in starting your own business. There will be rules and there will be boundaries that the franchise expects you to follow. I'll give you an example of that. When I owned my Supercuts, I used to have these jewelers come in, small business people who made beautiful jewelry. And they used to try to challenge me to show that jewelry at my checkout counter. And as much as I liked their jewelry, I couldn't get in the jewelry business. It wasn't part of the Supercuts brand. So that's just one example of, maybe that loss of full independence. It's a trade-off decision. You also have brand alignment. Think about when you're inside of a brand and maybe somewhere else in another location, there's a wobble in that brand. Well, it's going to bring, question to the customers who you serve in your community as to whether whatever happened over there in your brand might happen inside of yours as well. So there is that risk. And then, yes, there are additional costs, which we'll get into in a future slide around the investment costs upfront, as well as what's called ongoing fees or royalties. So what is a franchise? In simple terms, it is just another business model. It is a business where you obtain a license to use the name, the trademarks, the products, and the business systems that have been documented and defined by the franchisor. In exchange for that, what you are giving over to the franchisor is an initial franchise fee plus ongoing royalties. Royalties are typically expressed as a percentage of sales. So as an example, you might go into a brand or look at a brand where the royalties are 5% of sales. That means if in the month you generate $100,000, you're going to be paying $5,000 in royalties at a 5% rate over to the franchisor. So I mentioned systems, right? It is all about business systems. Oftentimes people think, oh, I want to go into a franchise because of the quality of the product. And of course, quality is important and you want to study and ascertain the level of quality of that product. But it really is the differentiator. I see it as really being those systems. And those are systems of marketing and promotion, systems of selling, systems of operations, and also systems of financial record keeping. So some examples you see here on the page: customer acquisition intelligence. In this day and age where digital marketing and social media are so important for virtually every business, what I find with the clients I help is that that isn't necessarily an area of strength for them. So the fact that the franchisor will help them either through their own team or through an outsourced third party to support the digital and social promotions to drive more customers into that business, that's an advantage in the franchise model, right? Those third parties or those vendors, they understand the brand, they understand who the customer is, they understand the message, and they're going to help you get it out to your market. Real estate and construction. At the onset of a franchise agreement, one of the first things a new franchisee has to do is decide where they're going to operate if that's a business that requires a brick and mortar physical presence. The franchisor will bring resources, both in terms of demographics as well as commercial real estate resources, to help you understand where's the best place for you to place your business in that community that you've signed on for. We know accounting systems, certainly, so that you can see how your business is performing, and hopefully that accounting system is across other franchisees, so you can do some comparisons and to do some benchmarking to see how you're performing relative to some of your competition. There's that initial and continuing training that we talked about, a CRM, a customer relationship management system, and a point of sale system, as well as other operations technology. So hopefully you see in here that the initial franchise fee and those ongoing royalties are really your way of compensating that franchisor to stay with you as your partner as you move through the term of your agreement, and for them to be reinvesting in the business, probably in ways that you would never be able to, both financially as well as your own time, if you were running that business on your own. So again, just summing it up, franchises are a proven process for starting and staying in business. They have been tried and tested in other markets. Franchisors, they're looking for people who will follow their process. A lot of the work that I do in getting to know my candidates and helping to connect them to brands is really understanding, are they someone who's minded to follow a system? Or are they going to be someone who's going to be a bit of a rebel and go outside the lines? So franchisors want people who follow their process. They want people who focus on being the owner, utilizing their skill sets. And, you know, look here, the skill sets we're talking about are things that people carry in from their past experience in business, whether they owned a business or whether they were an employee of someone else. They're bringing their business management acumen. They're bringing their people skills, their communication skills, their leadership skills. These are the kinds of skill sets that you bring over into a different business. Again, think about me as the example. I came out of banking. I went into hair. I knew how to lead people. I knew how to communicate. I knew how to build a brand awareness in the market and to build relationships that would bring people into our stores, but I didn't know how to cut hair. So as you can see, there's a role for everyone, including the owner's role is differentiated sometimes from the role of the actual delivery in that system to the client. Let's look at franchises through a different lens here, which is take a look at that wheel up on the top right, you know, the different categories. Many times I find when I'm talking with folks about franchise, they immediately go to thinking about food. And that's probably because, you know, there are a lot of franchise brands in the food sector, certainly here in the United States. But as you'll see in a few minutes when I show you another slide, there are a lot of different types of brands. So just take a look here at some of the range. And part of why I think services like what FranNet does can be helpful to someone is that when there are over 4,000 brands and there are over 90 industry classifications, part of the challenge, I think, for someone trying to do some of this research on their own is that it's overwhelming, that there's a lot for them to be looking at. And so hopefully you'll see it in a few minutes through the process we try to implement with our clients. We're really trying to focus on their strengths, their skills, their motivations, so that we can connect them to brands that are probably a better fit than what they might find just out on their own. Here's that example I was talking about. Just scan this page. We're not going to talk about each one of them, but you know, as you can see, there's more than food here. The other thing that I think you'll notice when you look at this page is that not every business necessarily requires a physical brick and mortar presence. I think that's one of the other things that we tend to think about when we think franchise. But there are just as many, if not more, franchises that I introduce my candidates to that are either home-based or maybe they're mobile, where you're traveling to the customer's location to deliver your service, as opposed to the customer coming to you. But there's a wide range of service areas when you look, you know, things that are both products as well as services, things that are in demand all the time, or maybe sometimes things that might be seem to be a bit more cyclical, perhaps. But let's talk about what franchising costs, because I mentioned earlier, there's this thing called total investment. And there's really three components to the total investment of getting started in a franchise. The first is the initial one-time franchise fee. Typically, the brands that I'm working with, this is going to be somewhere in the order of maybe $40,000 or $50,000. That franchise fee is going to give you certain stated rights as laid out in the franchise agreement and how you can use the brand in your market. Maybe it's a protected territory, or maybe it's not a protected territory, but you will have the right to use the brand. You'll have the right to use all of the operating systems and to go for all the training in order to enable you to be able to start that new location. Then there's also the other initial startup costs. I'll show you some examples in a few minutes, but you know, think of these as really, many of them I think of as being the same expenses that you would probably incur if you were going to open that same business and put your name over the door rather than the franchise brand. Things like rent or insurance or marketing expense, right? These are all startup costs that are laid out and spelled out for you by the franchisor before you get into their business. And then thirdly is the ongoing costs as well. Here's another interesting way to look at franchises. People think that franchises oftentimes are very expensive. And I think part of that is Again, we immediately go to thinking about food. And when we think about food, we immediately think about a physical building, the Golden Arches, right? But take a look at this, the total investment, those three components we just looked at on the last slide. For the brands that I tend to connect people with, those 200 or so brands, 30% of them, the total investment cost is under $150,000. 27% of the brands are in this range of 150 to 500,000 in total investment. And then about 43% are above 500,000. Those are tending to be businesses that are going to require some sort of brick and mortar capacity. So the thing, I guess, to think about here is if you immediately think about maybe I don't have enough money to afford a franchise, I can tell you that there are franchises that I've helped people look at that are $60,000, $70,000, $80,000 total investment to get into business. That's including the franchise fee and the other expenses of the business. So do your research. There's kind of something in there probably for everybody's investment range. The other thing to know about total investment cost is not all of the money has to necessarily be coming from you, meaning you don't have to be sitting on the cash for this. There are a range of different funding options that I see candidates using to fund the startup of their business. But generally speaking, I would say if you're going to approach a bank or a lender and you're going to go for a loan, they're going to be looking for you to have skin in the game as well, right? So they're going to be looking for you to have maybe 20, 25, upwards of maybe 30% of that money is going to come from your own personal cash. Franchisors will also be looking to examine your net worth and your liquidity because they don't want to create a scenario for you where you've put everything into the business and you don't have the flexibility to handle what I call your rest of life expenses, your mortgage, your car payments, your insurance, tuitions for kids, etc. Right? So they're always looking at making sure that you've got a backstop of money. But if you do put 20 or 30% down, there are a range of financing options that are out there to consider for the rest. And I'm not a funding expert, but I will just lay out some examples for you here. We've already talked about personal savings. I've seen clients work with family members that are backing them and that are sponsoring them and being their investors. I've seen people use home equity lines of credit. Many of us live in homes that have built up some significant equity versus what we paid for the house when we bought it. There's always the possibility of using that line of credit as a partial funding source. Small business administration loans. Those are loans coming from banks or lenders. It's not the government lending you the money, but the government is guaranteeing behind that for the lender. So that's what an SBA loan is about. Sometimes there are securities-backed loans. If someone has an investment portfolio, they can borrow against that in order to fund their franchise investment. Sometimes if it's a resale, meaning you have a franchise owner who's looking to exit, maybe they're retiring, they might offer you some sort of seller financing where you can pay them over time rather than paying them up front. I've seen people use life insurance policies. And then the other one that I think is interesting because we don't tend to think of this as being an option, but it is retirement savings. So there is a program called Rollover for Business Startup, or ROBS. And I've had many clients look at this, but if they have a 401k or an IRA or some other retirement savings vehicle where they have put money aside over time, they might be able to use and convert some of that balance over to fund their business startup. And the attractive part about a ROBS is that there's no tax and there's no penalties for directing the monies that way. So it's another way to think about how you might finance a business. I'll share with you some recent trends that we're seeing in franchising. Maybe this year we're still, I guess we're still trying to figure out which way the wind is blowing this year, right? Are there going to be layoffs? Might there be a recession? But I would say, generally speaking, the folks that I'm seeing looking at franchise are predominantly coming into it because they've chosen to exit corporate life. So corporate exits are still predominantly the employee's choice. I think work from home absolutely informed that. These days I hear more about people who maybe are working for a company where The company is expecting them back in the office more days per week than what they're comfortable with. And so they're starting to think about their options. Maybe they want to do their own thing to create more independence and flexibility for themselves. Secondly, franchisors, they're having to diversify their offerings to the franchisees in order to stay relevant and in order to help their franchisees respond to today's challenges. So I see that happening a couple of different ways. I see folks who've been in business and maybe have owned a business and developed a client base, and they've been successful with that client base, but now maybe they want to look at a franchise for an add-on service to that same client who knows, likes, and trusts them. I'll use an example of someone I helped a few years ago. It was actually a landscaper. He had an independent landscape business. He was very successful and had worked hard to build up that business. But he was thinking about diversifying his income stream by owning a second business. And he didn't want to start over again because he had all the scars and memories of what it took to get that landscaping business started. So he came to me and we talked about franchises that might help him connect to those same customers who know, like, and trust him. And he actually looked at an outdoor lighting business. So he knew that he had teams already on the grounds of these properties of his customers for his landscaping business. He knew that they knew him and knew of his business and liked his business because of the landscaping services. And he was thinking about an outdoor lighting business as being the second business, but he could do that through a franchise, independently branded, but still the ability to go back to those same customers. The other thing I'm seeing franchisors do is that they're creating, while they're never going to be an owner of the employees in your business, they're your employees. They can be supporting you in terms of maybe helping you with some recruitment strategies and how to plug into certain networks that they've seen as being more successful and to find the right fit of employee for your business. You know, these days we hear that a lot from folks. They say, it's been hard to find employees for my business. So if a franchisor can help support you on that and create inroads that accelerates your ability to attract and retain the right kind of employee for your business, that's been attractive to my clients as well. And then I would say the other is we have more clients that aren't necessarily looking to cut away as I did from their former career, but they might be looking to diversify and bring on an additional stream of income. Or maybe they're setting themselves up so they can retire from their corporate career or their paid job a little earlier than they might otherwise. And so they talk to us about what's called an owner executive model. So they're thinking ahead. Not every brand, I will tell you, in the franchise world is set up for this, but brands that have a model, and you can talk to franchisees where they aren't all in 100% in their business, but maybe they oversee, manage the manager. If you have a general manager type candidate that you could put into your business, that's another way to consider going into franchise, because the model can support that and you'll have a role still to play. So I don't want to send anyone away thinking that there are what we call passive income opportunities in franchise. Everything requires your time as an owner, but there are models that can include less of your time as an owner executive compared to when you are an owner operator. So more to follow on that if that's interesting to anyone. And then the last one I would say is, you know, because there is still this uncertainty on where the economy is going, I hear people talking a lot about recession-resistant businesses. And I'll show you some examples here on the next slide. You know, no one knows whether the demand for their business is going to stay stable, go up, go down. So when we talk about recession-resistant, I see it in three categories mainly. I see markets that are growing because they're driven by demographics, right? Whether the stock market is up today or not, the reality is that our country is aging. People are getting older. And so any business that is in the area of supporting senior care services, right? Maybe it's home health aides, maybe it's physical therapy, maybe it's adapting the home so that people can live in their home longer before they have to think about going into a community. There are businesses in franchise that do all of those things that I just described. You know, residential repairs, home modification, you know, really since COVID and consistently since COVID, I would say the home services sector of franchise has been a steady demand area. And I think part of that is, one, it was because we were all home and we saw things that we never saw in our home before when we were locked in. But more recently, I think it's people realizing that maybe because of housing prices or interest rates, they're not necessarily leaving their home anytime soon. So they're looking to see what they can do to maybe fall in love with their house all over again. And again, with the aging population, there's just a population of people in communities that frankly just can no longer do the kinds of things that are required physically to maintain and upkeep their home. And so there's demands in those areas that are creating opportunities for franchise concepts as well. I'll go over to recession-resistant essential services. We all got to know the term essential services during COVID, but businesses in the automotive space, again, when pockets are tight, people are looking to do what they can to maintain and extend the life of the automobile they have, as opposed to having to go out and buy a new car. So there's automotive maintenance franchises, damage restoration. Again, whether the market's up or down, if a water heater breaks, if there's a fire, if there's hurricane flooding, damage restoration companies come in. It's an interesting business because it's oftentimes paid by insurance rather than by the homeowner. But, they come in and they help you begin to get that home back to normal again, right? So again, recession resistant happens in all economies. I look at sign companies. That's a nice model in what we call business to business franchising, right? Businesses need signage and they need markers to be able to call attention to their business or direct people once they're in their business. The average sign is actually up less than a month in a business. So think about that in terms of the demand for things like sign companies in all markets. Commercial cleaning. COVID taught us that one, right? We have to keep our space ultra clean, ultra hygienic. Commercial cleaning businesses are definitely something that are recession resistant in franchising. And then tutoring services, again, during COVID and since then, there's a lot of catching up that's going on, I think, by kids in our education system, but those tutoring businesses, we've seen parents looking to invest. The demand is still there, regardless of what the stock market's doing. And then in the last column, we have businesses that help other businesses, right? So think about business coaching, digital marketing, advertising, staffing, how to find and retain the right kinds of employees. And then there are businesses out there around sales and employee training. What we found both in 08, 09, and as well as during COVID, so during the economic downturn of 08, 09, and during COVID, was that small and medium-sized businesses actually spent more on those categories to the right than you would have thought. So they are, I don't want to say they're inverse to what the economy is doing, but they certainly seem to hold in tougher, tighter economic times because these business owners know that, even when things are tough, they need to keep investing in themselves for skills and for their business. I'm going to switch gears for a minute here, and I'm going to talk about one of the distinctions in franchise that I gravitated toward when I was looking for a business of my own. But I talk with my clients a lot about the advantage of the requirements of what's called the franchise disclosure document. We've all heard the old joke, I'm here from the government and I'm here to help. I actually think this is an area where our government has most definitely helped. So franchising in the United States is regulated by the Federal Trade Commission. And the Federal Trade Commission has been very prescriptive to every franchise that is on offer, where they've said there are certain elements of your business that you have to disclose to candidates who are looking and considering investing in your business. And so along the way in the research that anyone does for a franchise, whether they work with someone like FranNet or they find it on their own, they will be required to receive and acknowledge the franchise disclosure document from that brand or that concept that they're looking at. And the reason that I love franchise disclosure documents, as thick as they are and as legalese as they sometimes will read, is that they will disclose to you as a candidate a lot of information about that business. Certainly more than you might receive if you were buying that independent business from a mom and pop, as we talked about before. But just take a look at some of these examples, right? The first section has information on the franchisor themselves. How long has that business been in business? What's the experience of the leadership team? Are there bankruptcies or litigation underway in the franchise that you should know about? They do talk about costs. We talked before about the total investment, the franchise fee, the other costs, working capital to to fund your business, as well as royalties. Other examples of what's in the franchise agreement, there'll be a very descriptive section that you can rely upon that shows what the obligations of the franchisor are to you, as well as what their expectations and your obligations are back to them as an operator using their brand in the market. They'll define what rights you have around territory, whether it's a protected territory, meaning no one else is going to come into that area, or maybe it's just territory rights that gives you a certain perimeter. When I owned my hair salons, I didn't own the whole market, but I was guaranteed that there was not going to be another Supercuts within 2.5 miles of my locations. So that's just an example. They will give you a listing and contact info for all their current franchisees. They'll also show you past franchisees. And where I think that's important, and what I talk to my clients about, is that gives you the ability to connect with some of these folks and to talk to them and hear their experience in the franchise, to answer some of your questions, to help guide you on whether this is the right business for you, and to really help triangulate what you've been learning from the franchisor as you've been going through their research process. So typically, a franchisor will give you some suggested names for validation themselves. But as I say to my clients, you have everyone's name in the FDD. Why not try to make another couple of contacts on your own and just see how those people respond as well? There will be earnings claims. That doesn't mean it's earnings promises, but there is a section of financial information in that FDD that the franchisor will give you so that you can begin to do some of your own modeling as to what the return on investment potential is for you in that business, or maybe so that you can anticipate what your time to cash flow break even might be in that business. You know, every franchisor lays out their earnings claims differently. I always say to my clients, pay attention to that section, but read the footnotes as well. Understand what is or is not included. There'll be financial statements of the franchise itself, right? They have an income statement, they have a balance sheet. You want to make sure that they're going to be around for the future for you. So you want to be able to look at their balance sheet and see what the strength, the financial position is of the brand. They might have a policy in there around your role in the business versus the role of a manager. You know, back to what we talked before about how active an owner needs to be in the business. There might be some stipulations in the franchise disclosure document that speaks to that. There'll also be details about things like renewal and termination and transfer. So whether it's at the end of your franchise agreement, maybe it's a 7 or a 10-year agreement, or maybe some other life event has happened for you and you want to anticipate what would happen in the scenario where I sell this business sooner than the end of the agreement term. You want to make sure that you understand what your rights are and how you can exit that business and what costs might be involved in exiting that business. So those are the kinds of things that are in the FDD. Like I said, it's a thick document. It's a heavy document. I always say to my clients, get it reviewed by a franchise attorney as well, once you know where you're thinking that you've got your eye on a particular brand. But it is a great, I think, an advantage in franchising where you've got tremendous transparency from the franchisor back to you as someone who's contemplating owning a business in their brand. But not every franchise is for every person. You've probably figured that out by now. And you know what? Not every person is for every franchise. And this is really where I like to just call out in a few slides the process we try to bring in as FranNet to try to make this as straightforward and as efficient and organized for someone as we possibly can. Here's in a nutshell on one page, the 7 steps that we take our clients through. Right? This is how we support candidates through their learning and their research. So let's jump into it. The first one is really looking at readiness. Are you a good candidate? You know, the first couple of conversations that I have with a candidate has nothing to do with how much time they have or well, how much money they have. It's more I'm trying to understand them as a candidate. Are they a good candidate? Are they willing to follow a system? Because I know that's what the franchise will be looking for. We do talk about funding. We talk about whether they have the means, whether they meet the financial, which franchises they would meet the financial requirements of. We talk about timing, you know, starting a research process now for a business that they might not own for 2 or 3 years. There's some education I can support them on, but maybe this isn't the right time to go through a full-blown match because they're not ready to quite pull the trigger yet. We talk about their support system, you know, is their family on board? If there's a spouse in the picture, Is the spouse supportive? Might the spouse play a role in the business? And I also want to make sure they have realistic expectations, right? Businesses that start up in a new territory take time to build up, to go from into break even, and then to go through to profits, hopefully. So I want to make sure that there's realistic expectations, both in terms of time and also financial return, because these things do take time, even in an established business like a franchise. The second thing we do is we invite our candidates to take what's called our entrepreneurial profile. This is a proprietary tool of FranNet. It's not a personality test, but it is a test that compares you as a candidate to a database of successful franchise business owners. And what I really value about the entrepreneurial profile is that whether a candidate goes further with me or not, they're going to get a copy of their profile. So they're going to hopefully gain some insights about themselves and some things to think about, whether or not they proceed on a franchise or not. So it really is a tool that helps us to establish your values, your motivations, your goals, and really have a discussion about your readiness to be a business owner. So at the end of this presentation, I'm going to put up a QR code as well as my own info. I would invite any of you that are on the call, if you want to just simply take the entrepreneurial profile for yourself, I'm always willing to have a debrief conversation. We can look at it together, see what it tells us, answer your questions. Okay? If someone goes further and they still want to go into the matchmaking process, now we're starting to talk about what we call building your business model. So I want to think about what's your timeline, because franchise agreements oftentimes are 7 or 10 years or sometimes more. And so we really want to be thinking about what other lifestyle considerations do you want to be thinking about when you're looking at a business that you could potentially own for that long, right? Does it need to be a business that potentially is mobile because you think you might move away from where you live today? These are some considerations, including your financial and lifestyle goals. Then we'll talk about the characteristics of the business itself. What do you prefer? Right? Because every business is going to have different characteristics. And part of me helping to bring you to a business or a possible list of businesses that are going to be a better fit for you, I need to understand what types of customers are you comfortable working with, right? What kind of is it? Do you want to have a business that is a service, or do you want a tangible product? How comfortable are you in newer industries or with newer brands? What's your growth timeline? Do you think that you just want to have one single unit or single territory, or should we be thinking about brands that give you the potential to grow into maybe a multi-unit operator down the line? Is it a business that has full or part-time hours? What kinds of employees are you comfortable with? I have people that come to me and they always talk about Chick-fil-A, right? We don't work with Chick-fil-A, by the way, but I always say to people, that's a business model where you're going to be working with 17 and 18-year-olds. Is that who you want to work with? If it is, that's great. But if it's not, then probably Chick-fil-A isn't the right thing for you, even though you might love the chicken sandwich, right? Is it a physical business? Is it a home-based business? Is it a mobile business? These are just some of the examples, but we build what we call the business model. And then what the business model does is it helps me to start to do my work. But before we talk about the add-on work I do, let's talk about making sure that someone is financially prepared. And we saw this graph a little bit earlier in a different format, but you can see here that there are franchise brands that are as low as under $50,000. There's other brands that will be over $500,000. So the initial investment range, the comfort level, the ability of someone to have the means to go into these different categories is something that is important, because I don't want to show someone brands they might potentially fall in love with that are unattainable for them in their financial position. Here's that example that I was talking about before while we're on financials of initial investment range. So if you look here, this is an example of a budget haircut retail store, maybe like the one that I used to own. But this is the way a franchise disclosure document will lay out the item 7, or what's called the total initial investment. And so if you scan down that, you see there's a franchise fee. That's a one-time fee. And all of these, I should tell you, are quoted in ranges because different areas of the country come with different levels of cost. And so the franchisor typically will state all of these expenses in a range to you rather than an exact precise number. And that's based on their most recent past experience of people who've gotten into the brand. But look down the list, many of these expenses, I bet you'd say, yeah, I'd have to spend this money, at least this much, maybe more sometimes, on some of these same categories if I were going to go hang the business out as, Jim McElhinney's haircut place, as opposed to maybe a Great Clips or a Supercuts, right? So these are some of the additional expenses of a physical brick and mortar example of a business. And then here I'll take you to another example, which is a residential home cleaning business, right? Again, there's a franchise fee, but this is going to be a home-based business for the owner operator. So there's no lease, there's no tenant improvements. So you can see that there's no cost there. So overall, there's a lower cost. But again, there are different component costs that will be laid out. So I think the takeaway here is just know that many of these expenses are the same, if not lower than what you might incur on your own, and that there are different ranges of costs depending on where you are in the country, but also whether the business is going to be brick and mortar or whether it's going to be home or mobile based. Getting back to my process then, we talked before about building that business model, those business characteristics. Then really my work begins to look at the 200 plus brands that we have relationships with to see if I can suggest upwards of 5 or 6 possible brands to bring back to my candidate to talk to them about and explain why I thought this business had the attributes that could speak to their business model and the goals and the vision they had for business ownership. This is actually one of the most fun times in what I do, because usually they're businesses that are in industries that people never thought of themselves as being in, right? Take me, for example. When I was sitting in banking for all those years, I didn't expect that I was going to be owning a haircutting business, but it had a lot of the characteristics of the business model that I built with my friend at Consultant. So we bring options to someone. We ask them to prioritize. They probably maybe research 2 or 3 at best concurrently, and we'll support them in the research. We'll help them get introduced to the franchisor. We'll meet with them weekly over a phone call or a Zoom to check in and see how that research is going, see what they're learning, try to help them through any questions or things that are on their mind, but really support them through the dialogue they're having with the franchisors to hopefully get them to a point where they make a decision at the end. And that decision is either a go or a no-go. And we always say at FranNet, sure, we'd love to see you say yes, but at the same time, a no is okay with us. If that's the right answer for you after you've invested the time in the research, we're going to be comfortable with that. So, I would say in closing here, and we have some time for some questions. So if anyone has any, throw them into the Q&A and I'll try to jump on those. But, the thing I always think about in franchising is it's a great business model for someone to have an entrepreneurial spirit, but at the same time have some guardrails, right? Be in business for yourself, but not necessarily by yourself. And that was certainly the experience I had as an operator when I owned my Supercuts. And it's the experience I see for virtually all of my clients that are looking at different brands and the ones that I've supported going into business when I check back in with them over time. One thing I didn't mention before, but I'll just put it out there. FranNet is a free service for candidates. So anybody that is thinking about business ownership, we're compensated by the franchisors who work with us. So the only thing I ever ask for from folks is that if they're serious, I'll stay with them. If they decide it's not for them, that's okay. Just tell me, right? But for candidates that are looking at business ownership, the costs of FranNet are no cost to you. Here's my contact information. Again, you can find me on LinkedIn. If you want to just get onto my mail list for educational pieces that I send out from time to time, that might be where you're at. You're just trying to maybe gather a bit more learning and to get into a lane where you can see some other learning along the way. Happy to help you there. You can scan the QR code or drop me an email and I'll get you into my database. If you want to go further in terms of just starting maybe the entrepreneurial profile, you can get in touch with me as well, or again, use that QR code. I'll send you the link for the entrepreneurial profile, and I'm happy to have a discussion with you after you've done it. I'll give you your copy electronically, and we can talk and see what it tells both of us about your readiness for business ownership. So with that, let me go to the Q&A. I don't see any open questions. So either I did a really good job or I put you all to sleep, or maybe both. But I want to thank those of you that are on. I'll give it another minute just to see if any question does pop in. If not, you have my contact info there. I want to thank you for your time today and for your interest. I hope you got some information out of this that you didn't have before. And again, I want to thank SCORE of Pasco and Hernando County for all that they do here in our greater Tampa Bay area to support business owners and aspiring business owners. And thank them for bringing me in today to have this opportunity to show you a little bit more about the world of franchise. Thanks again, everyone. Have a great rest of your day and enjoy the weekend when it comes to. Take care now. Thank you. Bye now.